Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
There were three things driving the market this week. The Fed minutes, third quarter earnings, and a rebound in commodity prices. Let's talk about all three. The Fed minutes showed that officials were reluctant to raise interest rates due to global risk concerns. Markets seem to respond well to that news that rates may remain low for a little longer. But what was your reading between the lines of those minutes?
Well, good morning, Melissa. Yes, it's risk on again for a period of time. It's not good news economically speaking, but because geopolitical aspects of this are going to affect our ability to continue the growth that we were hoping for and experiencing in the prior quarters. But in the meantime, it is good news for the market because it means that there will be continued support. Low interest rates will remain low. And it also indicates that the Fed is going to try to balance its move to closer when our economy is going to have a much more solid footing. And so the transition from a market being valued on low interest rates will be much easier than if they had already gone to increase rates. But in the meantime, I think that is risk on. I think there is a continued move to the upside for a short period of time. And one cannot call a bull market or bear market. One has to take what the market gives, and right now it is a more favorable environment.
But Dodge, I'm getting so many mixed messages from the Federal Reserve. The officials from the Fed, William Dudley, the president of the New York Fed, had hinted of negative interest rates. Then Fed Vice Chairman Stanley Fischer said that they're still on course to raise interest rates. I mean, that's an expectation, not a commitment, according to him. So we're getting all kinds of mixed messages coming up from the Federal Reserve. What is your take on what the officials are saying?
Well, you are correct. It is mixed, and the fact that now negative interest rates are beginning to creep into the conversation, to the news, and to the communications, it really is more possible that we will have negative interest rates, and less impossible, given the experience of the ECB and the Swiss National Bank, the central banks of Denmark and Sweden. So the U.S., the Fed has seen that it has worked under smaller situations. And in fact, if you look at the minutes, the dovish president of Minneapolis Fed projected a negative rates in his latest forecast of the path of interest rates that were released last month. So it's possible that we may have, and that would be very negative in terms of the reaction of the market as a whole and the reaction of companies. Right now, what is clouding our picture further in terms of our growth, Melissa, is a lackluster investment from companies sitting on cash, still too reluctant to deploy the capital that typically drives recoveries. So we are getting mixed messages. It is being reflected in how companies are spending money or not spending their money at this point, and also the impact of whether or not we're going to increase interest rates, leave them the same, or now it's beginning to creep in about lowering them. But if that were to ever happen, that would be a very negative message to the market. So we're hoping that the intended rate will increase, will come in at the end of the year, because that will give a message to the market that the economy is, at least the Fed believes the economy is strong enough to support that.
So where do you stand currently, Dodge? Do you think that the Fed will raise rates or hold or cut to negative?
I do not think that they will cut to negative. I do think they will raise it. I am looking for a raise in December. I suspect that the probability of it increasing goes up dramatically once you get into the new year, only because it's a new year. And I do think that the Fed realizes that if they wait much longer, it will be deemed very negative. So my expectation now is December.
Well, coming up this week on Tuesday, earnings season starts in earnest in the U.S. Are expectations already set so low this season that we might actually get some good news?
Yes, they really are set extremely low. I'm not sure we'll get positive news in terms of absolute, but relative to the lower expectations we may. They've been set low. The trend for lowering expectation has continued throughout the past 3 months. particularly important as investors are really looking now for guidance as to the health of the U.S. economy, not only in the past quarter, but for the rest of this year in 2016. You take a look at what FactSet has said. They've estimated that there's a 5% decline in earnings year over year, and a 3.4% decline in revenues for this past quarter, and this would be the third straight quarter without top-line growth. So this is quite negative in terms of what the expectations are. It is more probable, Melissa, that there will be some positive comparisons, and that it will be the reaction to the news, not the news itself, that will determine how the market is going to react overall.
Well, Dodge, the earnings reports are said to be kind of critical for fourth quarter gains in stocks. Are you looking out for anything particular in event you might need to change your outlook at the end of the year?
In general, we're looking for weakness from the emerging market operations to be offset by dollar trading relatively steadily across major developed currency partners from the third quarter. There will be much more of a drag for U.S. multinationals doing business in the Western Hemisphere. It'll be less of a drag for those doing business in the Western Hemisphere as well as Japan and Australia. We expect to be a much larger drag for multinationals doing business in Russia, China, and Latin America. So we're being very company-specific based on where their revenue stream is coming from.
And if we were to look at oil, perhaps last week we saw a sharp rebound in commodity prices. Do you think that this could be the turning point for oil? I mean, is the commodity slump over now, Dodge?
It is a commodity, so it is trading. We don't have to provide a long-term answer to that, but short-term, both oil and gold have had a terrific move this past week. And if you look at the way commodities trade, they're in A, B, C waves. We've had the A wave. It will continue for a little bit longer, but we expect a B wave correction that's likely to start pretty soon. But that will be followed by a C wave that will take oil and gold above the highs that we are about to put in place. So the news is positive. I think it's going to be much harder for oil to go back all the way down to a low, and if it does, it is more likely to test it positively. Right now, the eyes are looking upward.
Thanks so much for your time. That was Dodge Dorland, Chief Investment Officer of Lendor Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, one subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6, ends 8/25/12.